What is the one thing that came out of the Fed meeting that we can hold on to?
They announced that they are going to be purchasing, the government, what I'm talking about, will be purchasing $40 billion worth of mortgage-backed securities.
40 million?
Mary, add a couple zeros. $40 billion worth of mortgage-backed securities will be purchased by the federal government here soon. Yeah.
You got to tune in to this episode of Really Mary and find out more.
Really, Mary?
Welcome back to Really Mary. Super excited because it's a topic on everyone's mind here with Randy Williams from TBF Mortgage. What in the world happened with the Fed? Now, everybody's talking about interest rates and all these things, but Randy, tell me more.
Yeah, I mean, I think the Fed made the most aggressive move to date to actually bring mortgage rates down. Mm-hmm. You know, they have cut the actual federal funds rate 3 meetings in a row by 25 basis points each time. It's had very little effect on mortgages. You know, as a matter of fact, it's actually ticked up a little bit after that. But it is going to help with credit cards. It is going to help with the shorter term loans, the home equity lines, cars, credit cards, things like that. But the Fed announced yesterday that they are going to be buying $50 billion of mortgage-backed securities. That is pumping the market full of money, and that is going to be pushing down rates. And I think it's just the tip of the iceberg too. That's the exciting part. So
you said a mouthful there.
Yeah.
50 million?
40 billion.
Okay, I'm off
That's
by
a lot bigger.
I'm off by a lot.
Yeah, those
40
numbers, add a couple
billion.
zeros.
40 billion.
Yeah.
They're buying back. So what? Talk about that a little bit more.
So everybody's paying attention to the Fed cutting rates. Everybody is waiting for mortgage rates to come down. Everybody thinks the federal funds rate affects the mortgages. That's the short-term stuff.
Right.
We go off the 10-year bond market, okay, the longer-term mortgages.
Yeah.
So when the federal government buys $40 billion worth of mortgage-backed securities, they are trying to bring that bond market down, and the rates will follow.
Wow.
Yeah.
Wow. And they're all at once, or they're going to buy them? What does that look like?
The details of that weren't there. Just they had announced the number. And then the number is what gives people like confidence, right? They announced an actual number and said they're going to do that. I think they're going to continue to do that through 2026 until they get affordability where they want it.
I'm still trying to get over $40 billion and the federal government having the ability to do that.
Yeah.
And then we get the benefit with affordability because ultimately interest rates will come down.
Yeah, I mean, the bond market wasn't doing it on its own. So the government has the actual capital to come in there and push it a little bit.
Yeah.
And create some more confidence.
Okay, awesome. Yeah. Mm-hmm. Randy, what else about that? I don't even know if there's anything more to talk about.
Yeah, I don't know. I'm the eternal optimist. I've never been more excited about a year in my life, the one that's coming. I think it's going to be great for so many reasons. I do think I'm going to offer a lot of people some mortgage relief and help a lot of folks. So I'm pretty excited. Well, I'm excited too for a lot of different reasons. I mean, it's snowing, it's cold. Yeah. People usually want to move when that happens up north down here in the winter. And now we're going to have a little bit of an easing for the affordability, which is fantastic. Yeah. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus. Here at Really Mary with Randy Williams with TBF Mortgage.
You got to love this. Bond billion, $40 billion.